The pandemic accelerated the digitalization of e-commerce, and even though e-commerce companies benefited a lot, FinTech companies also saw an acceleration in their growth and expansion. Hello everyone, welcome back to the channel. Today, we are going to talk about a FinTech company that was requested in the Discord group chat that is targeting emerging markets, and the growth is impressive. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which link for that is down in the description below if you would like to join. We're almost 500 members and it's completely free. Many of you may know that I have been investing in Square for over a year now, since it is my favorite fintech company of all times. But there are new fintech companies that, even though they are in the same industry, they have different targets and offer different services that are worth taking a look. That is why today I'm going to talk about dLocal, ticker symbol DLO. It was established in 2016 as a Uruguayan startup company. Today, they enable global merchants to connect seamlessly with billions of emerging market users from places in Africa, Asia, and Latin America. For example, Spotify would like to connect with customers in Mexico. They use dLocal to process those customers' payment. dLocal is trying to solve a huge existing problem in emerging markets right now, which is the payment system that is fragmented, since there is a slow penetration of international credit cards in emerging markets where e-commerce and m-commerce is actually on a rise. dLocal helps global companies to offer their customers a simple solution for making online transactions easy and for paying local sellers and partners using local currency. Right now, they only offer payments to collect local payments, monthly installments, e-wallets, boosting payments, conversion rate, and reach, and also offer payouts to send mass payouts easily to Africa, Asia, Latin America, and the Middle East. Direct issuing to easily issue branded virtual and physical cards in local currencies. Right now, they have over 330 merchants. 2 billion combined internet users are available in 29 different countries. It is fully cloud-based platform, local to local transactions that offers one API, one platform, and one contract. Only to have broad access, improved acceptance, compliance, and many more that makes the company better in comparison to others. Now, in 2016, they were only available in 8 countries, which still was a lot when they were starting: Argentina, Brazil, Chile, Colombia, Mexico, Turkey, and Uruguay. Then in 2017, they expanded to Peru and launched different new and very useful features. In 2018, they expanded to India, Morocco, and Paraguay. In 2020, to Ecuador, Indonesia, South Africa, and Nigeria. Lastly, 2020, they expanded to Egypt, Bolivia, Cameroon, Ghana, Guinea, Senegal, Panama, Bangladesh, and Philippines, now being available in 29 countries. If that is not rapid expansion, I don't know what it is, since it demonstrates that they are looking to improve, innovate, and expand on a yearly basis. They work with excellent, big, and very well-known companies worldwide, such as TripAdvisor, Nike, Uber, Amazon, Zara, Microsoft, and many more. For example, dLocal unlocks the Brazilian market to international merchants to sell for the first time in Latin America's largest e-commerce country. This new agreement enables non-domestic merchants to sell in Brazil on Amazon's online store using dLocal new marketplace solution, which I think it is huge, because me being from Latin America, I know that e-commerce is a huge thing there, but we don't have that benefit that we have here in the US, like Amazon having a one-day delivery or being able to pay with US credit cards, because there is not that same benefit that in here. That is why I think that this kind of companies targeting emerging markets will actually have a nice growth. And it's not only in the fintech industry, it's also in other industries as well. According to them, this marks an important milestone for their relationship with Amazon, as Amazon is the king of e-commerce in the US and is expanding more and more internationally. Right now, the stock is trading at $31.10 per share with a market cap of $9.10 billion and a price to sales ratio of 72.53, which I know it's pretty high to be honest, but we are going to see why. On June 2nd, they announced its IPO price at $21 a share, well above the initial public offerings expected $16 to $18 range, but it ended opening at $31 per share. Since then, the stock has been dropping. They reported a total revenue of $40.2 million in Q1 2021, which is 123.7% growth year over year. Ended with a gross margin of 57%, which is $23.2 million. Ended with an operating profit of 46%, all the way up from 7% last year, which is impressive because, as you can see, their revenue increased massively year over year, but their expenses did not grow that much. Even their general and administrative decreased from $9.5 million to $5.7 million, which is something I like to see, since it means that they are improving their management of the company, which will help them grow in the future. Ended with total profit of $16.9 million, improving profit margin year over year. Their balance sheet has total current assets of $412.3 million and total assets of $418.9 million. The total current liabilities of $309 million and total liabilities of $309.9 million. So if we divide their total current assets over total current liabilities, it means that they have current ratio of 1.35, which is actually very good because you guys know I like to say it between 1 and 1.2, so everything above that is way better. Total liabilities over total assets ratio is 0.73, which means that they have a little over 73% of their assets in liabilities, which is a little bit high because normally I like to see it below 50%. Maybe I can accept 60, but 73 is a little bit high. The thing is that this does not concern me right now with this type of companies, as they have a nice revenue growth year over year, and this is kind of normal to see in this growth and startup companies. Now, on April, Uruguayan payment startup dLocal quadrupled valuation to $5 billion with $150 million raise, which impressed analysts and investors, as this happened in less than 7 months after securing $200 million at a $1.2 billion valuation. And even though the stock has been dropping and dropping since they went public, it still has a market cap of $9 billion, almost doubling April's valuation, which is obviously huge because even though their revenue is growing massively, they reported a little over $104 million last year only. I do have to say that my favorite fintech company has been Square. I've been investing in Square for a little over a year now. I know you guys know it. It has a market cap of $103.7 billion, a forward PE of 158, which obviously is high, but this growth and disruptive companies, we never know what to expect, as it happens with Amazon, and has a price to sales ratio of 8.74, which is way better than what dLocal has. Plus, the company saw a growth of over 266% year over year for the first quarter, which is obviously huge and impressive, as they are already a settled down company, way bigger, an older company, but it is still seeing such an excellent growth. With this, I'm not saying that dLocal is a bad company. No, I think it is an incredible company with huge potential, solving a huge and excessive problem in the emerging markets. I think they are still kind of starting, and even though they have expanded massively to different countries, they still have the potential to expand even more their products. For example, Square right now offers all the hardware and software for processing payments, but they also have Square Capital and many other services. Square Capital is basically them offering loans to their customers to help mainly small and mid-sized businesses that can't get a nice deal from a bank, and they offer all these services with a perfect way to repay the loan that helps businesses to have a less stressful loan as it repays automatically with a percentage of their daily card sales throughout Square, which means that they can pay less on slow days. Anyways, when Square started, they did not have all this product and services. They started very small with their Square Reader and Square Wallet, and then started expanding and expanding until today. What I want to say with this is that I like dLocal a lot because they are still kind of small and have room to expand, which means that they have room to grow and provide us investors with that growth. Now, am I investing in this company? No, not right now. Not because there is something wrong with the company, because I think that they are doing things right. They are targeting a very nice and growth market. Just that I'm focusing on other investments right now, and I'm already having exposure to the industry with Square, which I'm not mad at all, and like their valuation a lot. I love the industry and see huge potential for the whole industry as fintech companies are disrupting banks, and I know there is still room to continue with that. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps the channel out. Also have a completely free Discord group chat, which link for that is down in the description below. And I created a second channel in Spanish where I upload the same content as here but in Spanish, so it will mean the world to me if you go and subscribe there and share the channel with any friends and family. Thank you and see you next time.